TD Bank just posted its second quarter results. This is the country's second largest lender. It is going to cut 2% of the workforce. That comes after that massive anti-money laundering settlement in the States. Let's get more from Mike Clare, Senior VP and Senior Portfolio Manager at Brompton Funds. Mike, it's great to see you. Thanks for joining us.
Great to see you as well.
TD, certainly a beat, and I noticed Canaccord reckons that U.S. retail shone in the quarter, so it looks like doing well on the operational front.
Yeah, there are a lot of things going on with TD right now, but I think across the board it was a pretty good quarter, especially if we look at top line. So they've got, of course, like some expense issues, elevated expenses through the AML remediation program in the U.S. But if you look at the top line business, things are going well across a number of business lines. The U.S. retail bank is doing well. So, of course, they're in the midst of this balance sheet reduction program where they've got this asset cap of $434 billion in the U.S. because of what the regulators put in place as part of the settlement. Mm-hmm. And then they've had a program to, of course, reduce their balance sheet below that level because they want to make sure they have some capacity to lend to clients. But really,
what do you mean there by balance sheet reduction?
So, I mean, when the regulators came out and said, we're capping your asset base in the U.S. at $434 billion. That was what their balance sheet was at that time. Mm-hmm. So they came out with a plan to reduce that U.S. balance sheet by about 10% to give them the capacity to lend to clients as needed. Okay. So they've done some asset sales, some loan book sales, generally reduce the size of that portfolio so they have the capacity to manage those client relationships. If a client wants to draw on a loan, they have the capacity to do that. Right. And what we're seeing with that is that because they've been able to, offload some lower yielding portfolios, they've been able to they've run with an elevated liquidity provision or liquidity ratio on their books, mm-hmm. which is generally at lower rates. Now, because they're unwinding that and normalizing that and reducing the balance sheet, we've actually seen elevated or rising net interest margin in their U.S. bank, mm-hmm. which is positive going forward. And we think that can continue over the next couple of quarters as well. Yeah,
because it looks as though the profit in U.S. retail may have dropped. However, the margins were better, the efficiency, the costs were kept under control.
So profits are down predominantly because of the expense line, but that's a known. TD's talked about spending $500 billion US a year as a part of this remediation program for mm-hmm. the anti-money laundering issues that they came into as part of the settlement with U.S. government, U.S. regulators, and the Department of Justice. Mm-hmm. So the expense line is what drove a year-over-year decline in profits. But if you look at the underlying business, I think the underlying business is doing well. Mm-hmm. Those elevated expenses are going to be there for the next couple of years. Mm-hmm. But then as those roll off, they'll get back to higher profitability within that U.S. bank.
Right. So I should say that, the efficiency ratio, according to Canaccord, was better than expected.
Better than expected, yes.
And there was good news, too, on the provisions for performing loans. They were a bit lower than the street had expected.
A bit lower than expected. And I think importantly there are two types of provisions that banks typically book. So they book for provisions on impaired loans, so loans that have gone into some sort of delinquency status. Mm-hmm. That provision was actually down because of strong performance in their loan book. Mm-hmm. Banks also book provisions on performing loans to reflect the macro environment. Mm-hmm. And of course, the macro environment has weakened to some extent. TD in particular has highlighted elevated trade and policy uncertainty. And so they've actually booked a slightly higher performing loan provision, but you take it all together and things are a little better than expected. And I think the market will react well to the higher performing loan provision because it's something that's prudent and it shows a little bit of conservatism in their results.
Now, you have TD in your equal weight bank fund, I believe, naturally, but it's not in your discretionary portfolios?
No, it's not in any of our discretionary portfolios currently because because there are a lot of things going on with TD, we think we had been thinking that there were better places for bank money, elevated expenses, particularly in the U.S. There was up until, of course, several months ago, there was uncertainty over what was going to happen with the settlement. Mm-hmm. There's a little bit of uncertainty with the new CEO. I think he's doing a great job so far. We're going to have to take a look at this. I think this quarter was pretty good. And I think TD, if they can get back to, historically, TD and Royal have been the two banks in Canada that have been known for their deposit franchises and really good base banking businesses. TD's had their challenges, but if they can get back to performing well as a bank, doing what they do best, then think it's something we'll have to take a look at, and I think investors should take a look at adding potentially to their portfolios.
Yeah, I'm not sure if we could put up a comparative chart over 5 years for Royal Bank and TD, and obviously TD is behind over 5 years. But the stock, and there's what they did yesterday. But if we put up that comparative chart over 5 years, it may bring out the rally in TD Bank stock lately. It has been hitting 52-week highs.
Right. Lately, it's done well. It had gone through a period of challenges over the 2023-2024 timeframe as these issues came out.
Right. So the chart doesn't bring it out that clearly, but certainly TD Bank has been doing well. It looks like investors are warming up.
Warming up to it, yeah.
And they have this wonderful balance sheet as well.
Yeah, pretty strong balance sheet. They've got a lot of capital, predominantly driven by the sale of their Schwab shares in the U.S. So that actually drove an $8.5 billion gain in the quarter. They've added about 240 basis points of capital because of that. And so they have the best balance sheet, the best capital position of all the banks. And they've said that they're taking that excess capital and allocating a portion of it to share buybacks, which they've been doing at a pretty significant clip. They bought back over the past couple of months since they authorized that program about 1.5% of shares outstanding, just in a 2-month period.
No, that's not bad. Yeah.
And then they've also allocated a component of their excess capital, about $7 billion, to grow other parts of the business. So they can allocate it, whether it's the Canadian personal and commercial bank, they could allocate it to the insurance segment, wealth management, and then also their capital market segment, where they've recently integrated the Cowen acquisition there. So they have potential to, for organic growth because of all this excess capital that they can deploy into the business. And the one question is, how long that might take given the current environment. So they have the capacity to lend and the capacity to grow, the capacity to do business. The question is, will consumers and businesses want to do that in the current environment with the current uncertainty we're seeing in the macro policy environment?
We've only got 30 seconds, but what about a big fat dividend, big fat special dividend? Should they think about that?
That's one option. I think generally, I'd like to see the banks pay a steady dividend and grow that over time, and then allocate that excess capital either into the business or to buybacks, particularly with TD, where their shares do trade, at a discount to where they've traded sort of prior to all these money laundering issues.
Okay.
And if that management team really views their ability to get back to the core business of banking that they're good at, I think they view their ability to buy shares at a discount to what they think they're worth as a positive for shareholders.
Thank you very much indeed.
Thank you.
That was Mike Clare giving us his take on these TD earnings. Really appreciate it, Mike. Mike is Senior Vice President and Senior Portfolio Manager at Brompton Funds.